Good morning, everyone. I'm Vince Lansing. This is the Gold Fix Market Rundown. It's Tuesday. Hope you had a good holiday, good weekend. Your portfolio certainly did. Today we have two topics. We're going to discuss why you should not add to longs here and why gold is actually signaling a reinflation event is coming. There's the home page. We put out 18 stories, primarily on gold and silver, over the last 4 days from Friday to Monday. So we're going to try and take it light this morning. Let's start with the markets. 10-year yields are up 5. The dollar is 98.33, up 63. The S&P 500 is down 59, 64.13. The VIX is 18, up almost 2. Gold is 34.87, up $41, well off the highs of the evening after cracking 3,500. Silver, $40.60, up 90 cents, close to but not at the highs. Copper, 449, unchanged bid. I'm not even looking at copper right now. WTI 66.27, up a buck and change. Nat gas 286, down 4. Bitcoin catching a reluctant bid, still soft. Ethereum holding its own. Palladium and platinum are both up 20 and $21 respectively, in sympathy with silver and gold. This is about sympathy now. White metal summer, I guess. Gold, silver decidedly weaker, 85, 87, and grains are offered. Wheat down the most, down over 8 cents at 526. Not sure why that is. Okay, so there's the home page. We'll get to what we put out. We'll self-promote in a little bit. We want to start with the reinflation or inflation reignition. We sent a post out this morning, right? And the main phrase from that post is gold is rising not because rates will fall as people are talking about, but because they're expected to fall too soon. You can see that in global bond behavior. You may or may not remember there are two ways to fight inflation. The first way is by raising rates. So when you raise rates, that's supposed to cool the economy. The second way is if you don't raise rates fast enough, the bond market will say, whoa, you're not fighting inflation fast enough. And the bond market will start to crater. So yields will start to rally because they need to offset the inflation. And so now you're seeing Powell pivot very dovishly on August 22nd. And in doing so, the bond yields on the long end have started to go up. We're getting that seesaw effect. The broken bond ladder that we warned would happen for the last 3 years and has been happening for the last 3 years. So while most people will be saying gold's going up because the Fed's going to cut, they're perceiving gold as a risk on asset when they say that. Gold's going up because the Fed will cut. No, 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 no. Gold's going up because the Fed shouldn't cut, at least as far as inflation is concerned. All right, so we have a lot more to say about that in two posts that we wrote, one for founders and one for premium. But let's just read a little bit of the summary here. The Fed's Jackson Hole pivot away from FAIT marked a shift toward prioritizing employment, effectively tolerating higher inflation. Gold and silver rallied as markets priced in cuts of 25 to 50 basis points, though rising long-term yields signal deeper inflation concerns. India's treasury sales and gold buying alongside BRICS ties reinforce bullion demand. With key payrolls and CPI data ahead, payroll's more important. The Fed's September 17th decision looms as a catalyst for the next move. The full analysis is in the premium post just sent out. Gold inflation reignition is coming. Next, just some of the posts that we sent out over the weekend, and we're just going to give you a quick of, because there are different categories. There's so many categories for gold right now. On the 31st, before the reopen, we looked at the CFTC. We didn't have a Sunday discussion, and the first words out of our mouths alone were "Holy shit," because the macro discretionary, much to our pleasant surprise, was back as of last week, and we go into why that happened. And essentially, we were saying the market will be higher over the next week to 5 weeks in that conversation. India buys gold. This happened over the weekend during the Shanghai Cooperative Summit. India buys gold, sells treasuries deep in China ties. That explains the situation right there. Gold and silver soar in Labor Day. That's more of a breakdown in all the events, tying it all together. Founders, why gold is rallying may be complex. We're going to touch on that a little bit, but the insights from banks, uh, uh, founders see. Miners, the U.S. pushback. I'm not founders, miners, the U.S. pushback. That explores, without saying the phrase, explores the potentiality of nationalization of mines. Founders, mining and the new protectionism, similar concept. How much more gold do central banks need to buy? That was an extrapolation based on some BOA analysis and our follow-up on it of how much more gold would central banks need to buy in dollar terms and in ounce terms. And it comes out to be about $2 trillion at current prices. You can see all those posts. Coming soon, BRICS versus G7, the cause of it all, the case for gold hits 20,000. That's not our case, but a couple people are saying it. Some of them have great reputations. We're going to break it down and go through it at some point during the weekend. Moran's Mar-a-Lago plan revealed. We had that ready, but we didn't send that out over the weekend. There was just too much going on. BRICS versus G7, the cause of it all, is a replication of a lecture that I gave in 2022 to students about why we were where we were right after COVID. Data on deck. Labor Day was yesterday, PMI, and Friday is the big one. We're going to spend a little bit more time on charts today because it's a tactical moment. We said silver to 40 before gold to 3,500. That happened. This won't hold much longer. That was done. Today, we're going to focus on why you do not add to, you do what you want to do, okay? But we're talking to ourselves here. We say you do not add to longs here. I expect a minor swoon. Think of 3,500 like 2,000 was. It flirted multiple times, but only really was broken when it closed above 2009. So call it gold at 3,509. This is a long wick above where we believe the BIS selling was before. You may or may not remember. I talked about it in the past where the BIS would cap rallies and would go sideways. It did it in December of 2023, 2 months of sideways. And we believe, I mean, I believed it before, but I kind of backed off on it because I saw producers selling as well. I believe they capped it back in April. And since then, producers have been selling. And I believe someone's back there. I'm not completely convinced we're not going up, but hear me out in a second. Okay. The next $50 could be lower, right? If you're looking for insight on if you should book profits, that's up to you. Remember, there are exotics in this market as well. We'll go through the charts in a second, but before we do, I'll give you some levels. This is the calendar for the next 13 days. Non-farm payrolls is this Friday. That's the big one. But the other big one that really no one's talking about yet, except for Zero Hedge and I think Goldman, preliminary benchmark revisions for BLS last month. They revised them down. Last year in September, they were revised down. So BLS is just basically a shit show when it comes to reliability, and you can guess why. But the revisions lower could seal the deal for Powell, which is why he cut a year ago on September 18th, that and the political issues. PPI and CPI, normally very important, and they are very important, but they're secondary now. Remember, he removed the average inflation target concept.